The U.S. and China agreed on the first phase of a trade deal Friday. The deal, which would roll back some American tariffs, gave investors a sigh of relief. Stocks hit record levels on the news Monday and comes after another landmark trade deal between the U.S., Mexico, and Canada. On Face the Nation Sunday, U.S. Trade Representative Robert Lighthizer called the deals momentous.
Friday was probably the most momentous day in trade history ever. That day, we submitted the USMCA, the Mexico-Canada agreement, with bipartisan support of business, labor, agriculture. We actually introduced that into the House and the Senate on this, which is about $1.4 trillion worth of the economy, of trade. And then in addition did this, which is about $600 billion. So that's literally about half of total trade were announced on the same day. It was extremely momentous and indicative of where we're going, what this president has accomplished.
But not everyone was celebrating. The Washington Post's Heather Long made a list of the winners and losers of the China deal. Heather Long is an economics correspondent at the Washington Post, and she joins me now to break it down. Heather, thanks very much for being with us. We saw the U.S. Trade Representative call this deal momentous. The White House says it's amazing. So who would be unhappy about this deal?
Well, there's a lot of tariffs that still remain in place, so a number of U.S. companies are frustrated that they're still subject to tariffs even after this initial Phase 1 trade deal went through. There was a lot of hope that the president would scale back even more the tariffs that are already in place. Small and mid-sized businesses in particular have been hit hard, and manufacturing companies continue to be in a technical recession. There's not a lot of relief happening in this Phase 1 trade deal.
Well, earlier Monday, the president's economic advisor, Larry Kudlow, held a news conference where he was pretty bullish about the deal. I want to play some of what he said.
The deal calls for $200 billion additional U.S. exports in these hard goods areas, or in Chinese case, imports. We are going to double U.S. exports. The positive effects on economic growth in this country cannot be exaggerated.
So, Heather, is there a risk the White House is being overly optimistic?
There's always a risk when you're talking about China that they're not going to hold up their end of the bargain. We've seen that time and time again when agreements have been reached with the Chinese. So we still haven't seen this deal actually on paper, so the Chinese side did not openly refer to that number. When they gave their press conference on Friday, they did not say that they would buy $200 billion more worth of U.S. goods over the next 2 years, like the White House has been saying. So it remains to be seen if this will actually come through. I think what's clear here is that the Chinese side is likely to buy more in the next year or two, possibly a record amount from the United States. That should be good headlines for President Trump. The question is whether the cost is worth it. There has been a heavy pain from this U.S.-China trade war, and you have to remember that the Chinese came to the United States back in the spring of 2018, so before the big escalation in this trade war, and the Chinese made the same offer to President Trump. They said, if you don't put all these tariffs on, we will buy a lot more agricultural products, energy, natural gas, these sorts of things. So you basically sit here and say, has this whole trade war been worth it? What have we really gotten at the end of all of this? And basically right now, a lot of it looks very similar to what we could have gotten a year and a half ago.
Well, this is just Phase 1. Do we know what Phase 2 is and what the next steps are here?
Everyone certainly hopes there's going to be a Phase 2, because remember, the whole reason for going after China and putting these tariffs on in the first place was to get them to stop stealing U.S. trade secrets and to stop stealing U.S. intellectual property. We see a little bit of movement in Phase 1, but very, very minimal. I thought it was telling in that interview on Sunday with U.S. Trade Representative Lighthizer that he said Phase 2 is in process, but it would take years.
Yeah.
So again, not expecting that to be even in 2020 or 2021.
Right, still very much a long ways away. Well, turning back to the USMCA, Mexico's trade negotiator on Sunday said it would not allow foreign labor inspectors to operate in the country. Is that deal at risk?
It looked like it might have been at risk, but here we are 24 hours later on Monday. The U.S. Trade Representative Lighthizer put out a letter addressed to Mexico trying to assuage those concerns. It's interesting, you used the term labor inspector. If you actually look at the language that's been put out around this deal, they do not use the word inspector. So it's a little bit different than like monitoring Iran for nuclear weapons here.
Right.
They're trying to make it sound softer, that they're calling it an attaché, so somebody who would be sitting in the U.S. Embassy in Mexico City, who would sort of be responsible for keeping an eye on these issues. But the letter today said, specifically, the United States will, of course, respect the sovereignty of Mexico. And it looks like the response to that from the Mexican side has been a pretty good thumbs up. It looks like we're moving forward here.
Interesting to hear about that sort of finessing of that deal. Well, in your latest piece, Heather, you write the Federal Reserve should really be credited with the country's strong economy. Why do you say that?
It's been a dramatic turnaround in the economic outlook since August. I think you and I spoke over the summer, and that's when recession fears, there was about a 50-50 chance of a recession in the next year. Sitting here today in December on the cusp of New Year's Eve, the recession fears are under sort of around 20%, so less than half of what they were in August.
Wow.
And as I write today, a big part of that, some of it is a little bit better trade situation, but the majority of it, the credit really goes to the Federal Reserve. They did 3 interest rate cuts, and they really told both Wall Street as well as Main Street that the Fed is ready to do whatever it takes to keep this expansion going. And the stock market back at record highs today, home builder confidence at a 20-year high. You can see the results of that right now.
All right, Heather Long with the Washington Post. Heather, thank you very much.
Thank you.